Hello, and welcome to the stock-specific class here for Thursday, August the 19th. I went a little bit late in the market update on Tuesday. Today's class is going to be a little bit shorter. Hopefully that's okay with everyone. I covered a lot of stuff in that class, and I'll probably just kind of touch on a few things here in today's class. But and with the conditions we're in, we're not going to have a lot of stocks that we're going to want to be trading. In fact, we're not going to get into any new trades today. We'll look at some, and there's some that we can put in the watch list, but the conditions are still not ideal for getting into new trades just yet. So we're going to be patient and wait for that to change. And today, it could change pretty quickly. Today would look like a little bit of a bullish reversal day so far, and we'll take a look at the chart here in just a second. But as far as the direction alerts, I mentioned this on Tuesday that we would likely see these indicators back off a little bit. Momentum was in the buy range. It's backed off into the hold range now. Same with Brett. It's just typical with the market pullback right here. And this is another reason, though, why I feel like this is just a short-term pullback that will probably ultimately move higher. We're not pulling back from an overbought condition. We're not pulling back from a overly bullish sentiment position where everyone feels like the market's never going to sell off. It's going to go up forever. And so I still think we're once this kind of is done, we'll probably end up moving higher. Sentiment is still high, but it's not it hasn't been in the extreme range either for a while. We're still okay from that standpoint. One thing, what I mentioned earlier, that we probably won't get any new trades today. If you go into the buy-sell ratios, one thing that we keep an eye on is the buy-sell, buys to sell of the whole market, all the stocks out there. And right now, as you can see down here, we're below, we're way below one. One is kind of the minimum that we'd want to be at. So there's a lot more sells out there in the overall market than buys, and so it's just not ideal to be loading up on new positions in that environment. And we're kind of seeing that in the results of some of the trades that we're in. So when we look at the portfolio here, we'll see that we're down. We're not down as much as we were on Tuesday. We've rebounded a little bit. There's a couple of stocks that have helped us do that, but it's not surprising when you're in an environment where the sells are more than the buys, the sell signals are more than the buy signals, that you're underperforming a little bit. Your portfolio is underperforming a little bit. And that's where it gets back to the patience, kind of waiting until those conditions improve before you start getting a little bit more aggressive. Now, what that means, too, is that we might get a buy alert. Remember, I've set up on the watch list all these alerts to email me when they go from hold to buy. It might mean that we may get a buy signal, but we don't enter some of those trades just because of the market conditions. So again, but when I'm doing this with the portfolio, I'm going to be I'm going to make some decisions based on my experience. If you want to keep it simple, you don't have the charting skills yet or the ability to read price action yet. You can keep it real simple to the signal. If you get the buy signal, you get in. You get the sell signal, you get out. That's what the software is designed to do. But the reason why we have these classes is to teach you a little bit more. Like we've done these trainings to teach you how to read a chart, how to read price action, where you can, in addition to the software, make better decisions on your trades. And so that's the purpose of this. And so again, I don't want to imply that you can't just keep it simple, buy on the buy, sell on the sell. But if you want to take a little bit more time and learn a few skills, you can improve results. And that would, that's just obvious in anything you're in. If you can improve your skill, you're going to do better. So, all right. So with that ratio down low, we don't want to be getting into any new trades right now. Let's take a look at, if we look at the sentiment, It's dropped, but we're still pretty far away from that extreme, so we're not worried there. Real quickly here, if we go look at the individual stocks, or excuse me, the indexes, the SPY, you can see let me switch this to candles here. You can see that we opened lower, we gapped down at the open, we've managed to move higher. So that's what I mean by a bullish reversal. If you look at just the indexes themselves, they may not look like they're up by much or anything like that. It still might look a little bit weak if you're just looking at the amount they're up or down. But the price action today is a lot more bullish. Now, back on Tuesday when we were selling off, we did come off the lows of the day, and actually we came off the lows shortly after I was done with the update. So it kind of, it did. And now on the surface, that could look a little bit bullish, and it came off the lows, came all the way back up, almost to where it opened. The problem, though, is what I was talking about in that update, which is that typically you don't have a real quick sell-off and go higher again. Usually, when it starts to sell off of a new high, which we reached on Monday, there's usually a little bit further to drop. So it wasn't surprising that we sold off a little bit more yesterday, and we could still possibly have a little bit more of a drop. Now, a lot of times pullbacks tend to happen in three waves. You get the first move down, which is your wave A. You get a attempted rally, which is wave B, and then you have your flush out move, which is wave C. But as I mentioned many times in these updates, we haven't had normal price action over the last several months, and you can see these last few pullbacks have just been pull back a few days and then take off again, pull back a few days and then take off again. Here you had a little bit of you had a pullback. It had a couple of days where it rallied, didn't come all the way back down, or it didn't go lower. It came back down to these lows here, then took off again. Had a little bit of an ABC type move to it. Here had a little bit of an ABC move to it. But the last couple have just been these little quick pullbacks, and then it's taken off again. So with that bullish reversal day today, it's possible that that the market comes right back up again. But because typically you get that wave B, wave C, what we want to watch for, particularly tomorrow and early next week, is is this leading to just a bounce? Do you get a 1 or 2 day bounce? And then you get that wave C where it comes down a little bit deeper. Ultimately, though, however that plays out, I still think ultimately we're going higher. I still think this is just a correction within the uptrend, and mostly I feel that way because we're not in that overbought condition. We're not in that. The psychology doesn't really line up right here for a much bigger pullback. But you can't know exactly what the market's going to do, and our job is not to be market predictors, but rather forecasters, and we have to make adjustments with forecasts. And as trend traders, we're going to do whatever the chart is telling us we need to do, what the best decision to make based on what the chart is telling us. But that, based on what I know, that's what I would be looking for. Is this could be just a pullback like we've had recently, where it takes off again. But we could get a little bit of a bounce, have one more move down. But ultimately, like I said, I think we're still heading higher. All right, so having that, well, let's take a look at the other indexes as well. The Dow, kind of the same thing, not much difference there. The NASDAQ 100, same thing. And then the Russell. The Russell is down again today, and it's again, that could be a little bit of a reason to believe that maybe there's a wave B and wave C lower. It's really been underperforming, and remember, this tends to be a little bit of a leading indicator. So that's something we do have to pay attention to is the fact that the Russell 2000 is showing greater weakness. We want to see that outperforming the other indexes to the upside in order to be a lot more bullish in the market. So that is also a concern of mine. Another concern is that we did see the VIX spike up. Move down to the VIX here. I'm going to skip to the other. We did see the VIX spike up yesterday. Now today it also moved it higher, but it's actually trading lower than where it opened, and that reflects kind of the bullish reversal in the SPY. But the fact that it was elevated yesterday and that closed near the highs of the day too was a little bit concerning. It didn't come off the highs like it did the day before. Now the chip stocks have had a nice bullish reversal today. That's something to keep an eye on to see if that can lead to the NASDAQ moving higher. The transportation index is lower though. We're looking at this bounce right here to see if that was maybe a bottom that it put in and it's going higher. That still could be possible, although this is a pretty deep pullback. If that's just a pullback for another move higher, that's a pretty deep pullback right there. So that concerns me that maybe all this was just a bounce and that we're still in the downtrend. And remember, the transportation stocks tend to be a leading indicator of the market, of the economy in general, and you compare that with the Dow industrial average, the Dow 30, and with the Dow showing a bullish reversal in the transports at the lows of the day, actually moving lower, that's another thing to be concerned about. So now, remember what I always say is we look at all these different things, we look at the different clues. Rarely are we going to have all of them pointing in the same direction and telling us that the market's going up or going down. But I think it's important that we at least gather that information to kind of understand the environment we're in. And, based on what I've looked at so far, my conclusion would be, again, what I said in the beginning, that it's probably not a good idea to be getting into any new trades right now. Let's wait until there's a clear direction. And because we're buying stocks right now, we're not shorting, we're not doing any bearish trades. We'd want to see a stronger bullish sign of the market, to have a little bit more confidence that things will go up, and to get that higher probability that things will go up. And that's what we're looking for. And I just don't see it yet. And so my conclusion would be to be patient. Let's wait until those things look a little bit stronger. All right, as far as individual stocks, let's get into, we can add some to our watch list. There are a few that I do like. Under computer and technology, I'm keeping an eye on, and some of these have a little bit of a lower strength rank than we've had to kind of move down the list. Now, part of that is because some of these are already in our watch list, but also that with the market being a little bit weaker, those strength ranks tend to drop a little bit. But Canon right here, CAN, is a 95 strength rank. Now, I don't fully understand Bitcoin. I'm trying to wrap my head around it a little bit more day by day. I have a brother that trades cryptocurrencies, and he knows just about everything there. He's trying to explain it to me in layman's terms as best he can. I kind of understand it enough to get why it's becoming more popular. I just can't wrap my head around the specifics of it. But this company provides equipment for Bitcoin mining, and so you say, well, this stock looks like it's been hammered. Yeah, and what I'm looking for here is the possibility that it's turning the corner, that we've had this drop and that it's starting to move up into a bull-shaped move to the right side of the bull. Have a little bit of a pullback right here. Now, so in this case, because it's related to Bitcoin, it'll tend to trade a lot with Bitcoin. Obviously, Bitcoin's pulled back quite a bit recently and is starting to rally over the last week or two. And that's kind of reflected in the movement here. This kind of bottomed out when Bitcoin kind of bottomed out and since then it's come up, and Bitcoin recently has kind of pulled back after a run up. This has kind of pulled back after a run up. So let's switch the signals on here so we can see this is still at a hold signal. It went to a buy and then back to a hold. What I'm going to look for here is and I'll put it in the watch list, but what I'm going to look for is I want this to, within the next day or two, end this pullback. I don't want this pullback to get any deeper than it is, because then you have to wonder if it's not done dropping, if it gets back down here, if it's still going to a lower low. I want to see a higher low. I think if it does rally from here and goes back to a buy signal, it'll give us that higher low that we can have a little more confidence in. We could also wait for it to break out to a higher high if we want to get that extra confirmation. But again, this looks like it's developing the early stages of a trend reversal back into an uptrend. I want to see a little bit more evidence of that, but that's why I'm going to put it in the watch list. We're going to keep an eye on it. We're going to check it, and we can look at a little bit of the longer term chart of this as well. You can have this big run up right here, come all the way back down, and then again, this is kind of a basing type behavior where it's kind of looking like it's done falling and could start to look like it's moving back up again. Another way to look at this could be forming a little bit of an inverse head and shoulders pattern. Here's your neckline. You break back above that neckline. And again, you have just a few months ago, it was a $40 stock. I mean, you have a huge upside potential for very low downside risk. But like I said, I don't have confirmation to get in yet, but these are the type of trades I like to look for a lot of times, at least for the big profit potential moves. And so we'll be keeping an eye on that one. I'll throw that one in the watch list. Another one under computer and technology is this MOSY 94 strength rank. And kind of a similar idea here where this big run up, pull back, and what could be a little bit of a larger ABC correction here. And a nice little burst of a move up, and then kind of a little smaller ABC pullback right here. Again, same thing. I want to see that put in a higher low. I'd like to see this take out this high, go to a higher high, start acting like early stages of an uptrend. So we'll keep an eye on this. And again, we'll make a judgment call. If the market conditions really look like they're taking off, and if this goes back to a buy signal, which it probably will go back to a buy signal before it breaks out. But we can match all that up later. We'll put this in the watch just to keep an eye on it. And then one more in computer and technology, and I know we are moving down that strength rank list a little bit, but like I said, we don't have to trade these. Ultimately, we don't have to trade these, but we'll put them in the watch list. But this OPRX 94 strength rank. And this is really kind of in a critical spot right here. This could be wave A, wave B, wave C, correcting this move, which recently broke out to a new high. We're a little bit past that 50% retracement of that move. So this is a critical area. It can go a little bit past 50%, but you don't want it to get too much further than that. 618 is kind of in fact, we can take a look at that. Let's put in our Fibonacci retracement tool, which is this up here. And then we can, or not that, that's the volume bar. This is the Fibonacci retracement tool right here. And then our selection tool, we're gonna go from this low up to this high. So I'm gonna zoom into this area right here. See, we're right at that 618. And this is partly, I don't always have to use the Fibonacci tool. You might get to this at some point if you put a lot of work into it. I could kind of eyeball it. I knew we were right at that critical spot. It looked, just visually, it looked like we were right there. And sure enough, look at that, right at the low of today, we're right at that 618 retracement level. It can dip a little bit below that. You know, we don't want to get too picky with the stuff where we start looking for absolutes, but it would need to start moving up here pretty soon. And it's kind of at a critical spot, but it's at a spot where we can put it in the watch list. We can always kick it out next week if it keeps dropping. But what I want to see is it hold right here and start moving up and give me that higher low. You already have the higher high. So I'm gonna throw that in there. We'll keep an eye on it. Under business services, I like this BT Bit Data Incorporated 95 strength rank. By the way, let me go back there real quick. You can see that two of the stocks that we're currently in are at the top of that list: Marathon Digital, MARA, and Riot. Although some of them, both those are pretty close to their stop loss points, so I'm hoping that holds. But these are related to Bitcoin. But I like this BT, kind of the same as the one we just looked at, where I like that it came all the way down, it had a nice strong move up, and it's kind of been pulling back a little bit of a choppy, kind of an ABC type pullback right here. Now we can check that retracement zone as well. This is probably a little bit closer to 50%, maybe a little bit below 50%. Let's see what it looks like here. Ooh, there's my eyeballs aren't as good as I thought. We're actually pretty close to that 618 retracement, probably from that intraday high up there. Threw me off a little bit, but so this is at a pretty critical spot here too. It needs to hold this. Start moving up, but we'll put that in the watch list there. Keep an eye on it. And then let's do a couple more. Let's go under. I'm going to go under a sector I haven't looked at for a while. It's down the list a little bit, but the medical sector. Now these tend to, and a lot of times tend to be more volatile, meaning that you can make a lot of money with these very quickly if you're right, but you can also, they can move down very quickly. I've seen some of these lose 50% of their value overnight on a drug that they're working on that ends up not getting approved by the FDA or something like that. And so you can, you can live and die by that volatility sometimes. You've got to be careful not to have too many of these stocks in your portfolio, because you could put a stop loss down and it could gap down way below that stop loss if some news comes out. Sometimes the news comes out of nowhere, you're not even anticipating it. But 98 strength rank, I like this NTLA, Intellia Therapeutics. I think I pronounced that right. What I like about this is I like the breakout move here, and then I like kind of this bowl-shaped move, and then it's kind of pulled back a little bit. Again, I don't want to get too deep. This is about an area where about as far as I want to see it pull back, but I want to see it go back to that buy signal. Again, this is another one. You can wait for the breakout. We'll make that decision when it goes back to a buy signal. We get that alert. We can decide what we want to do, but I'm going to put that one in the watch list, and then one more in that sector. This is one you probably heard of related to the whole COVID thing. There's Biogtech here, BNTX, 97 strength rank. Again, really nice run up right here. And then you look at the pullback, it looks like it's a little bit more choppy. Again, probably about a 50% retracement of that move up. So it's in an area here where we would expect it to find support, start to move back up. If this uptrend is still strong, we'll put it in the watch list and wait and see on that. All right, so that gives us a few that we'll keep an eye on here. Let's analyze our portfolio. We can see that we're down a little over a couple $1,000 from the recent selling. And some of these are pretty close to their stop loss point. And you can see that here. PFMT, we have a stop loss at 3. It's at $3.86. So you can look at the current stock prices, and you can look at your stop losses, and we're kind of close on some of these. But some of these stocks have started to take off too, again, and outperform. Our stop on PFMT is down here at $3, so we're, there's still a little bit of room for that. And it had a nice little bullish reversal candle today after just having about 5 straight days of dropping. So hopefully that means we're going to work our way back up and break out. And if not, again, that's why we put our stop here, put it at a spot where we know we're probably wrong. And so that one we're just kind of hanging on to. RM, our stop, I moved the stop up on this one to 50, which is right below here, which is right at this breakout area. Kind of an indecision day so far, but the fact that if it can close higher than where it opened and even move up near the highs of the day, that would give a kind of a bullish hammer candle formation, which would be pretty good. But I'm not too worried because look how it dropped. It dropped in more of a choppy fashion. So it drifted a little bit more, not completely sideways, but it's dropping. It's these smaller moves. You don't want to see those real strong downward moves, those impulsive moves down. This is a little bit more corrective looking, where it looks a little bit more choppy. So that one still looks fine. So again, the purpose of doing this too, I want to show you, I mentioned this last Tuesday as well. I want to show you that how to be patient. We're down a couple $1,000. That can cause a little bit of anxiety. Well, it shouldn't cause any anxiety because again, part of what I'm trying to teach you here too, when we make these trade decisions, is to make sure you can accept the risk. I'm keeping the risk at about 1 to 1.5%, which is going to be about $1,000 to $1,500. If we're wrong, we're going to lose that amount out of a $100,000 portfolio here. If that amount is still would freak you out and would cause you to stay up at night, that's too much. Reduce it. You always get it down to $300 or whatever that amount is that you can handle. Because when you do that, then you can objectively look at the chart and say, hey, the chart still looks fine. I'm still okay. I'm down a little bit right now, but no reason to panic. And if it does get stopped out, you're not freaking out and thinking it's the end of the world. And that's, you have to get down to that, get that under control in order to be a successful trader. I don't know any other way to put it. If you're freaking out every time you lose money, you're risking too much. It's a clear sign that you're risking too much. And you got to get that under control. Because if you want to be like the big players on Wall Street that make a lot of money, that's what they learned. That's the secret. That's one of the main secrets they learned. I used to think that learning how to read a chart was the most important thing about trading. Being able to have a feel of whether that stock was going up or going down was the most important part. It isn't. And that's why there's a lot of people out there that can read a chart. There's tons of people that can read a chart that don't make money in the market. And a lot of it comes back to, most of it comes back to not learning the most important part of trading, which is accepting your risk, being able to trade without emotion, not being influenced by as strongly. We're always going to be influenced, but not being influenced as strongly by fear and greed. How do you do that? Well, that's what I taught you. That's how you do it. You get the amount of risk down to a level that doesn't freak you out. And guess what also happens? Because you get that risk down to a level that isn't going to freak you out, you're going to have a smaller position size, which means when it works out for you, you're not going to make as much as you would have made had you taken more risk. And that's why you don't get overly excited about your gains, because it's like, yeah, I made $1,000, but I could have made 10,000 if I would have risked more, if I would have taken my original position. But that's why a lot of times you don't succeed, is because you don't get that you're not able to get that under control where you can accept the risk. The risk isn't that big of a deal. How many of you bend over, especially if you're older like I am, bend over to pick up a nickel on the sidewalk? You don't, because it's not worth the back pain of reaching down to do it. That amount of that nickel is not worth the pain of bending over to pick it up. I'm not saying that what you're risking in your trades has to get down to that level, but that teaches you the point I'm trying to make, which is you got to get that risk amount down to a level where it's just not that big of a deal if it happens. You're not going to lose sleep over it. You're not going to freak out about it. And that's why I'm not worried about most of these positions with some of this pullback that we've had. MSTR, let's take a look at that one. I think I moved the stop up to this low right here. We're close to it, but nice bullish reversal day today so far. See if that holds. We recently did have that breakout. We went to a higher high, hoping this holds as a higher low. If not, and we'll get stopped out, and it's probably a good thing we'll get stopped out and move on to something else that looks better. So far, although that's a deep pullback. So far, I think we're okay so far. That could change, but we're going to stick with that stop that we have. And then Mara right here, Marathon. This is actually a little bit of a bullish candle yesterday. It tried to rally. The sellers were able to push it back down, but they pushed it back down after it already pulled back. So the fact that buyers were showing up and trying to push it up is a good sign. Seeing a little bit of that today as well, where it's trying to rally. Sellers are kind of pushing it back down. But that behavior, that candle right there tends to be a little bit more bullish. So again, hopefully that holds. Our stop is right here. So if it doesn't, if we do get stopped out, it'll be a good thing. We'll move on to something else. Espn finally took off for us here. I remember this one was the one that I think back in here, somewhere back in here, it was showing a buy signal. Might have been that day right there, showing a buy signal, and then it faded into the close and then went back to a hold signal. We went ahead and got in. I was a little bit worried about that. But you can see this a little bit of an ABC pattern right here on the pullback. And then it's really taken off the last couple of days, really put in, so that's a higher low right there, and it looks like it's about ready to move to a higher high. Actually, it could have a new closing high today. But that one's working out. And that one's kind of bailing us out a little bit because this one's been going opposite of the market. It's been moving up with the market coming down. So that's a good sign. Need a few of those stocks that can help keep those losses from getting too bad. Riot, again, this is going to look very similar to Mara, MARA. Ooh, we're real close to our stop. Our stop is right below that low right there. So I'll keep an eye on that. It may be that I have to stop out of that tomorrow. I don't think it'll happen today. Let me go back to the portfolio, see where the current price. So it's at $31.41. Our stop is at 30. So that could be a little bit of danger there. Price action is kind of similar to Mara. That's actually a little bit bullish there, where it's tried to rally and come back, but it could end up closing higher than where it opened. If it does close higher than where it opened, that could be a sign that it's finding a little bit of support. There is a lot of support right here with these lows back here. So I'd really want to see that move up off of that. And if we do go lower and stop out, it's probably a good thing, because it's probably probably going to end up going lower if that happens. STKS. Our stop, I think our stop is in this area right here. I think we moved it up in this area right here. Either way, though, that doesn't look great. I mean, we do have a bullish reversal candle, but I don't like it when it goes straight up and straight down. This doesn't look corrected. There's not a choppy pullback here. It's pretty much straight down. But we'll see if there's a bounce, if it can rally off of today's bullish reversal candle. And I'm saying that right now, bullish reversal candle, all this could change going into the close like it did Tuesday, where it just started selling off. That could look different by the end of the day, but so far that looks okay. I just don't like the way that I don't like how fast that came down, though. That kind of concerns me a little bit, but we'll keep an eye on that one. Tesla had a nice little bullish reversal day, or bullish move yesterday. It's back down again today. That's not a great sign there. Our stop is in this down below this area right here. It did go to a higher high. We're still any rally off of this area here would give us a higher low, but it needs to start picking up a little bit of momentum there. And then DDS still looks good to me. This is Dillard's. It broke out of that range. We saw that on Tuesday. It's kind of pulled back to that breakout area, and it's held that breakout area so far, so that's a good sign. Hopefully this starts to rally back up here soon as well. I think our stop right now is down below here. If we can rally off of that breakout area, I'll move the stop up to this area here, but I want to see it start moving up first before I adjust that stop. Now, I did sell that FUV stock. We did that on last class. If you go under my portfolio and you look under trading history, it'll show you when you got in and got out, and it shows that FUV, there was a sell. I got out of that one. We lost $1,300 getting out of that, but it hit our stop loss. You get out, and it's actually continued to go lower. Take a look at that here. Well, actually, it had a little bit of a bullish reversal today, I think. No, still going lower. So we lost a little bit more, mostly because it gapped down. Remember, it gapped down and gapped down below our stop. I waited until class to get out. So we probably lost a little bit more than we would have if I would have gotten out right when it gapped down in the morning. But you can see here's a good thing. It's still drifting lower. It's still going down. So we'll move on from this one. I won't be pulling this one up anymore, at least not right now. Not for a while until it gives me a reason to look at it again. That could be a little bit of a lesson too. Don't get married to these stocks to where you got to keep an eye on them after you get out. I learned early on in my trading career just to move on, have my focus on the ahead of me. Sometimes you can sit back, you can go back and just watch that stock you got out of that lost you money, and sometime it'll turn back around and go back up, and you'll say to yourself, boy, I wish if I would have stayed in, I wouldn't have lost any money at all. It just took another 3 weeks and it went back to where I got out. And what you do is you start reinforcing bad behavior. Why did you get out of the trade? You got out because it hit your stop loss. Get out of the trade. If it looks good again 3 weeks later and it gives you a buy signal, get back in. But don't follow these things and watch these things after you're out of them and play the what if game, because what'll happen is the next time you hit a stop loss, you're gonna say, oh yeah, but remember that XYZ stock 3 weeks later it went back up and I wouldn't have lost money at all. And so you say, I'm going to ignore my stop loss order because eventually it's going to go back up again. And next thing you know, that stock is at $2 and it's going to be there for the next 10 years or something, It's bad trading. And it's the reason why you're getting your butt kicked in the market. Don't do it anymore. When we kick these things out of the list, they're out of the list until I go back to my sector thing here and I see a 98 strength rank and a nice pattern to get back in. I don't need to be watching it when I'm out. And that goes with the watch list too. We boot some of these stocks out of the watch list. Don't keep watching them every day. All right, let's take a look at our watch list here, because we're going to add some stocks to it, but I want to make sure the ones that we're in, we might end up booting a few out. I didn't have a chance to really go through all these. ZDGE, I like it still because of that still looks corrective. I'm still waiting for it to start taking off again. If it dips down, because now we're getting an area here where it's at its previous breakout area right in through here. this thing doesn't start moving up here pretty soon, I might boot it out just because it's already in a sell signal. But this definitely looks corrective. It's choppy. It's more choppy sideways type movement here. So I'm still hopeful eventually this thing will start giving me a reason to get in it, start taking off again. But I also don't have stocks on my watch list forever if I can avoid it. NLST still looks fine. In fact, we might be getting a buy signal here pretty soon. Oh, you know what? This is an OTC stock. We're going to boot this one out of the list because it's too small. OTC stands for over the counter. Some of these stocks you can't even trade in your brokerage account, or you have to contact your broker. They're not listed on an exchange. They're not on the New York Stock Exchange or the Amex or the NASDAQ. And so usually I'm going to boot this one out just because it's too small. We're probably not even going to be able to trade it, or it's going to be difficult to trade okay. And I usually catch it. Sometimes though I might miss that. If you see it, if I'm in class and we're going over stock and you see that's an OTC and I missed it, let me know, and I'll stop looking at it. Unfortunately, you can't really screen those out of the scans. It's kind of difficult to get all those screened out. So, but let's go ahead and boot this one out just because it's too small. So NLST. Now, typically, those OTC stocks will be like $1 or $2 stock. They'll be really low. So the fact that this was a $7 stock, I probably assumed it was okay, just because of the dollar amount. But yeah, I'm going to kick that one out here. So just click the red X button right here, put it out. Now let's look at SUP. I'm going to boot this one out. What I was hoping for here was that here's kind of your pullback. It looked like it was starting to move back up. It looked like we had a higher low. We put it in the watch list, and then since then it's gone to a lower low. That's a lower high. I'm going to boot this one out. But we never got a buy signal, so it never gave us a reason to get in it. So it's not that big of a deal. Bolt. And by the way, this is not surprising that we're doing this, booting a lot of these stocks out with the conditions we're in right now. Now, I'm still hoping this holds. This could be a sideways correction, and then it could still move a breakout and go higher. So I'm going to keep this as long as this holds the support area right here. So I'll keep this one in for now. Oops. JILL, kind of the same thing here, as long as that support area holds. ABNW, yeah, this one still looks okay. This is one we just added on Tuesday, but that looks like an ABC. You kind of got this, kind of looks like it's on the right side of here's the bottom, looks like a nice impulse move up. This looks corrective. It can give us a buy signal. I wouldn't mind jumping in that, especially if it can eventually break out of that area there. It can really take off. I'll keep that one in. And then PFMT. That's a pretty deep pullback right here. I was hoping it was going to hold that little hammer formation on Tuesday. It didn't. Gone to a sell signal. I'll still give it to this low right here because it could be where it didn't break out completely right here, so it could just be in a sideways range that breaks out. And if it does, it could really take if it breaks out, if it holds this sideways range and then moves up and breaks out, you can take the top of that range, the bottom of the range, and project that upward as a minimum target of it to go, for it to go. A lot of times it'll make that move. So I'll hang on to this one. I don't mind hanging on a little bit longer on this one. All right, I'm going to add one, and then I'm going to be out of time, and I'll add the rest after class here. But let's go back to the ones that we were looking at earlier that we want to put in our watch list under computer and technology. I'm going to put the CAN. Oh, wait. Yeah, computer and technology. Yeah, CAN right here. The way you do that is we're going to click on this green plus button right here. and add this to our, we got to select the watch list. We're going to add it to our stock specific class watch list. And then I want to click save and go to watch list here, because we're going to also put in our alert to let us know when it goes from hold to buy. It'll email us. Click save and go to watch list, and then here it is at the bottom of the watch list here. I'm going to check this box at the right, and I want it to signal, I want to email me, email alert for CAN, signal changes from hold to buy. Click save, and I'll get that email, and that's it. I'll put the rest of those in later. So again, not a lot of great stuff to talk about today because we're down a little bit, but there, I mean, it's part of the learning process. I want you to learn from the, I like this. Some of you may not like this, but I like it when things aren't working out, to be able to teach, because that's when you really pay attention. When things are going great, you're making money, everyone thinks they're a genius. Everyone is the smartest person in the world. You're just not in a position to learn usually. And but when you get beat up a little bit, it's like that humbles you a little bit. You're like, yeah, I don't know what I'm doing here. I thought I knew what I was doing, but I don't. Teach me. And that's when you usually are in a better position to learn. So I'll try to take advantage of that and take these moments when things aren't as good to teach you what I've learned over the years. And hopefully that helps you to not have to go through what I went through. All right. Thanks, everyone. Have a great weekend, and we'll see you on Tuesday for the market update. Bye now.